Good morning, everyone. Welcome to our Tuesday morning trading session. So yesterday was quite the roller coaster. The market continued in a rather sideways fashion for the remainder of the day, with a slight bullish slant, I suppose. We're looking now at the NASDAQ here on the Eagle Trend Trader. But it was quite the day, back and forth, back and forth. Starting to get a little bit nauseous. And of course, the market moving insanely fast. Through the overnight, continued to rally, and here we are opening with a little bit of a gap now below the market. It'll be interesting to see whether traders try to get into that gap or whether they'll just continue to push higher. A quick overview. I see there's a few new names here in the room. Welcome. Please don't be shy about asking questions. What you're looking at here is the diversified trading system along with the Raptor. Here in the top left, I have the Hawk Scalper. Top right, we have the Falcon Swing Trader. Bottom left is the Eagle Trend Trader, and then the bottom right, of course, is the Raptor. The charts here I'm looking at are for the NASDAQ market, and I also have the Euro-Dollar and crude oil open on my other monitor. But don't be shy about asking for a market or a chart. If there's something you don't understand, please ask. Okay. Just checking the expiration on the July crude contract. It looks like we'll be rolling out of that one toward the end of next week, or pardon me, the end of this week. All right, what time is it? Oh, we're just about 5 minutes into the session now, and the pace a little better than what we saw yesterday. Getting a bit of a bullish start to the morning. Here, the Hawk Scalper produced a macro pullback signal. Here is the Eagle now with our first in-sync signal of the day right here. This tends to be a fairly reliable signal for us, and it looks as though we have an opportunity to do a second push entry. My problem is that at my current 2% risk parameter, that trade is going to be a little bit out of reach. What if I tried the, ooh, that could be a little cozy. What if I could risk it back to the hard edge? Ooh, even that's out of reach. What's going on? Okay, we're going to get a red bar buy signal here in the Hawk Scalper. That one may be worth trying to get on board, because I can risk it like so, and the stinker ran away on me. Well, that's all right. It's still early. You can see the red bar buy signal. The red bar buy signal actually disappeared. Although the trade would have worked out just fine for a scalp. Wonder if we're going to get a trend change signal here now. Getting a couple of tests of the extreme. The trend change signal, very risky because it is a counter trend signal. The good news is it's not going to cost a lot to try it. I do have a tendency to try counter trend signals with only a single contract. And I promised I wouldn't run these trades out today, that I would actually take profit on target, so I'm going to be a good boy. And I'll try to do that. I just wrote July in my, I just wrote July down in my journal. July 13th. No, not yet. Well, that trade unfolded so fast, I didn't even get a chance to write it down. We hit the break-even trigger and then bounced back. Now we're getting a hard edge buy. Oh, come back here. Let's see if I can get it like that. Oh, really? Okay, I'm going to force the trade here to break even again. We just came within a tick of the auto break even trigger. And what I do not want is for this to be the fourth bounce off of these highs. All right, so now we've actually hit the break even. We should hit our profit objective now. And there should actually be a little bit of follow through here if you're going to try to run it out. But as I said, I got tagged so many times yesterday at break even stop outs where I could have had profit. Oh, don't tell me it's going to be another one of those days. Get up. Oh, you're kidding. All right. Now the broker will be happy. So we're still looking for a direction, coming now with a first micro-macro cross signal here, going to generate the trend change signal here on the Falcon as well. And it looks like we just poked through it enough. We would have hit our profit objective, maybe. Would have been awfully close, I think. Oh, look at that. They just kissed it. So we've got a big struggle going on up here, and we keep retesting the highs. This is what I refer to as a test to the extreme. All right, now they're going. I was going to say if they start to fold over on themselves and they produce a sell signal here, that should be a good shorting opportunity. Crude oil inching higher, euro a little bit sideways. Our first micro macro cross here in the hawk also built into a 4-arrow consolidation pattern, which is also a strong signal for the hawk scalper. Hey, way to go, Tony. Tony says, I picked up 20 ticks on that first eagle signal. Well done. I'm curious, why is this not letting me? Well, that should be within my reach. What's going on? What's going on here? Why didn't I get that one? Oh, now it's working. Stinkers. All right, so the first eagle signal, plotting a little bit higher, hoping to get to its ultimate 40 tick target. And we're slowing a little bit. This is where the market left off, not yesterday, but the day before. This is the close of Friday's market. You remember Friday's market, of course. That's when the NASDAQ came unstuck and fell like a rock. All right, so we're getting another macro pullback signal. And we're also producing a late filter entry. I'm concerned about the second macro pullback signal because that tends to develop near the end of a trend. We're also getting some big volume bars here as the eagle hits its profit objective. I'm thinking we're going to get a soft edge sell, actually. I'm thinking the market is going to try to retrace here to the hard edge. And so I'm on the alert for a sell signal, and I'll even get my stops in play. There we go. So I've got everything ready for a possible short. Okay, sorry about that. Something happened to my mic. So we got the number 2 signal here. I just ended up going in with a market order because the signal developed quickly. And what I'm looking at now is just a little bit of a pullback here. The ultimate target, of course, would be the hard edge. And because this is a counter trend signal, it is a lot riskier than a with trend signal. It does appear as though we have a bit of a bullish trend today. That's something to bear in mind whenever you try a counter trend trade. They are inherently more risky. So you don't want to go into one too heavy. The trade-off for the higher risk is the smaller risk amount because you can usually cover them fairly close above the most recent little swing high here. So while the probabilities are down, as I said, your actual risk exposure is smaller, especially if you go into a manual mode, as I have a tendency to do, and just restrict my exposure on the counter trend trades to a single contract. All right, once again, I'm just within a tick of my break-even trigger. I'm going to force the trade to break even. Again, my logic is that if the market gets about 3/4 of the way to my profit objective, it should continue on to the profit target. If not, I'll settle for a break-even stop out. And as you've seen, sometimes I fool myself and get tagged a little bit early, but hopefully this won't be one of those times. Hopefully. Or maybe it will. Oh man. What's with the market today? You're not playing nice. All right, we're going to get a first micro macro cross lower. Looks like we're working on a trend change signal lower. Oh, sure. Now they go through. And we've got the first micro macro cross here signal. So it looks like that fell off rather quickly. I should have anticipated that order. So that has fallen off, hit its profit target. The Raptor coming back here with a second counter trend signal. That's the soft edge sell. This first one that I was unfortunately tagged at break even, you can see hit its profit target. So I guess I got a little bit too cute with the profit targets again. Got out a little bit too early, and it looks like now we're down here. We're going to reach the hard edge, which is the ultimate objective for the soft edge sell. All right, not the follow through I was anticipating there. I thought we would see a little bit more, but they could just be pausing. to get a handle on which way they might be leaning this morning. We're into the hard edge now on the Eagle Band. We might be getting a bounce out of that. Maybe a bigger test of the extreme and another failure. We're fairly neutral at the moment. All right, so the Raptor now found the hard edge, or close enough anyway. I wonder if we're going to see a little bit of a bounce here, a bigger test of the extreme, maybe a double top, in which case that would put the market into another bear trend. All right, here comes that bounce. Maybe. I guess there's an FOMC report out Wednesday, so the market may be a little bit dull before there. Still waiting. Hmm. Interesting. We're starting to breach the hard edge and produce signals below the cloud. That's kind of a prelude to a possible reversal. Now, we haven't seen a decent test of the extreme here, at least not on the eagle. The test of the extreme, of course, is a retest of the high. Which would confirm the bearish stance on the market. Well, what can I tell you, folks? We're taking our time here this morning. So maybe I'll break out the harmonica and entertain everyone for a few minutes. Won't that be fun? I'm watching crude oil here as well. We had a nice little trend change signal in crude oil with our cloud crossover. Didn't get very far with it though. The market kind of putting the brakes on shortly after that decline, and that's starting to make me think maybe we're going to see a little bit of a short-term pullback before the next leg lower. Right now, I would say that crude oil is definitely more bearish, even though we may see a little uptick off of this support zone. So for those of you watching crude, that's something that you may want to keep a lookout for. Okay. Tony says, just for fun, I'm drawing parabolic trend lines on the NASDAQ and went long against the trend. Not quite sure how you're drawing your parabolics, maybe like this. The bigger trend is like this, right? So we have breached it slightly. And I'm fairly confident we will see a retest of the highs, and the highs of the morning way up here, 57.68. So there's plenty of room in here to profit, of course. You may even want to interpret this as a hard edge bounce, even though the cloud's technically not in sync. This should not print as a hard edge bounce. That would be the number 3 signal. We are going to get a red bar buy off of the hard edge here in the eagle, and a possible green bar sell that we could also look to buy. So things starting to look a little bit more bullish. Oh, I see Tony says he did that on the hawk. So we had a 4-arrow consolidation that didn't go anywhere. It actually turned into a 5-arrow consolidation, which there is no such thing. And we may have to wait just a little longer for a proper signal, but here's an opportunity in the hawk for an early buy. So this would be looking for the failure of the green bar sell. Now, remember the green bar sell, or its bullish counterpart, the red bar buy, they tend to develop near the end of a trend. So you can always use them as an early warning. If the trend is going to truly reverse here, we should also produce a first micro-macro cross signal on the hawk, and that's going to be a little bit more reliable. But there's an early opportunity for those of you who want to try to take advantage of it. All right, well, might as well close that order because it ain't going that way. Not yet, anyways. Oh, good thing you got out of that early, Tony. Tony says his 10-tick scalp target was 57.51, so you got out of there without too much to spare. Looks like that little rally got to 57.54 before turning over on itself. All right, so we're back toward the lows of the day. We're getting a little bit of volume coming through on these bars. You can see with the dynamic equivolume bars, we can tell there's more volume on these stack bars. And of course, volume always increases when the market hits a resistance area. As there's going to be a little bit more buying and selling. I'm not saying the market's going to reverse from here, but this is characteristic of areas where the market does show more price sensitivity. great question here from Peter. Peter asks, good morning, Eric. Well, good morning, Peter. If you are a new trader, would you wait until the trade forecaster indicated a trend mode? All right, let's go here to the trade forecaster. Okay, so currently the trade forecaster in trend mode for about another 5 minutes, after which we are moving into swing mode. What does that mean? Well, that means trend mode very often means that you're going to get a move like this, but it is not guaranteed. You can see right now we are in trend mode, and I didn't notice how we started the day, but we were probably in trend mode since the open, or pretty darn close to it. And you can see that this morning's trend, not nearly what the trend was for the last couple days. Okay, so how are we to interpret that? Well, when the market is in trend mode, we normally anticipate greater follow through. That's true. But we also expect smaller pullbacks. So you can see, even though this morning we didn't get the big follow through, we also did not get really wild pullbacks. When the market is in scalp mode, well, the opposite is true. We're going to expect bigger swings, less follow through. So what does that mean for you as a trader? Well, if Trade Forecaster is in scalp mode, you probably should be taking profit on target. See, that's what I should have done yesterday, because the market was in wild swing scalp mode. If I had taken profit on target, I would have done much better than I did. When the market is in scalp mode, you probably need bigger stop losses or a deeper stop loss to accommodate the wild swings. When the market is in trend mode, well, you can try for a bigger profit objective. You can probably get by with tighter stop losses, although this morning I got tagged a few times on my break evens. And when the market is in swing mode, well, it's kind of in between. You should see some follow through, but the pullbacks are probably going to be a little bit more pronounced as well. Like, for instance, here, this was probably swing mode all through here. The market, you know, had good periods, but it also had deeper pullbacks than those we might anticipate in trend mode. So no, I would not necessarily just wait for trend mode, but if I knew the market was in trend mode, then I would trade a little bit differently than, let's say, when it's in scalp mode. So I hope that makes sense. That's a very good question, Peter. All right, bear with me here a moment. Bill's asking, good morning, Eric. Well, good morning, Bill. Bill asks, got the ultimate support and resistance suite fixed? Good. Do you know how to set up NinjaTrader so that your stop or order is filled just by touching the price point rather than going through it? Okay, well, so I'm guessing what Bill is asking is, if I wanted to buy 57.47, how do I get filled just at 57.47? Well, the order you want to use is a stop order. As soon as the market hits 57.47, your order will become a market order, and you'll get filled at the first available price. Sorry, we got some stuff going on in the neighborhood and there was a big truck going by, so I just needed to mute the microphone. What you want to use is a stop order. The stop order will turn into a market order as soon as 57.47 is hit. Now, if you're looking, let's say, to sell 57.47 because you want the market to stay in a downtrend, you think it's going to head lower. Well, the only way to do that is with a limit order. And you will set your price at 57.47, you'll set your stop loss and so on. Here the market actually needs to trade at 57.47 and a quarter before you will get filled at 57.47. It actually needs to go one tick higher. That's just the nature of the limit order. So if your intention is to buy, or pardon me, sell 57.47, you actually need to put your order one tick below. So you're going to look to sell your stop limit 57.46 3/4, which means you will get a fill at 57.47, or you might even get lucky, get a sell at 57.46 3/4. Okay, great questions. I'm glad you guys are asking some questions while we're waiting for something to happen here. Randy says, my trade forecaster is different than yours. What do I need to do to change? Well, probably, I'm just guessing now, the only thing that's different is our start times here on Trade Forecaster. There is only one thing that you can change, and that is your market open time. It has to be set to the market open on your computer, native to your time zone. So unless you're one of these people that forces your clock to be on Central Time or Standard Time, assuming you're not already in those time zones, you will have to set your market open for your native time zone. So for me, the stock market's open 6:30 a.m. Pacific time, and that's the time that I use. So try that, Randy. That will probably fix you up. Russell, I'm going to save you the effort. Russell's probably looking at this saying, is this a rule of three? Can we short this? Well, we do have the 3 counter trend signals, don't we? But we haven't had the test of the extreme yet, so it's not something I would be anxious to short. I think we need to see a test of the extreme before we get too excited here. Paul asks, do you know if Raptor will work on any other platforms besides NinjaTrader? Unfortunately, no. And that is because of the framework of the other charting programs. Now, I'm not knocking, MT4 or any of those other software programs. The problem is, however, their programming is not robust enough to handle all the programming that's going on in the Raptor, in the Trade Manager. There is a lot of things going on behind the scenes here that you don't even see. So NinjaTrader, the only platform currently robust enough to actually allow for this software to work. And Adam and the gang have tried. They have tried to adapt it to other platforms, but it's just, like I say, their software is not robust enough. Not yet, anyway. So what I'm on the lookout for here is a possible counter-trend signal, a possible number 2 signal. That would be our soft edge buy, because I'm still holding out for a bigger test to the extreme here. We haven't seen it yet. But it had better develop soon, because I certainly don't want to be buying in up here. Oh, we got a first micro-macro cross in the hawk, so there is an early opportunity in the hawk. Oh, darn it, it's going to run on me. And they just tagged their profit objective. All right, so we'll put that away for now. We're getting a red bar buy here on the eagle, but the cloud facing the wrong way. I suspect that this little move now may develop into our counter trend signal. That's the number 2 signal. It's kind of a funny day here this morning. Interesting comment here from Elmer, and it's not off track at all, Elmer. Elmer says, Eric, a bit off track. Some people watch, in addition to order volume, and assess their stops and targets, etc., by where they see buy and sell volume. But they also seem to be fouled up by what they call icebergs. Have you used this, and what are your thoughts on it? Okay, so what Elmer is saying is people will watch charts and they'll look for big volume. And the idea is that you're going to try to trap traders out of their positions. All right, let's go back here a little bit. Okay, so the notion is that because there's a lot of buying going on here, if we try to short below here, below the big volume area, we will do so because all these people who are buying here, well, their stop loss orders are going to be right here, aren't they? They're going to be relatively close anyway. So the notion is that if we can see the market trade below that level, we're going to trap these traders out of their positions, and therefore the market is going to head lower. The icebergs that Elmer is talking about is that sometimes it doesn't work out that way. Sometimes, and if you've been trading for any time at all, you've probably found yourself in a trade like this where the market will go one tick or a couple of ticks below and then give you a big reversal and head the other way. That's the iceberg right down here. The buying volume was greater than you anticipated, or the selling volume was not as strong, and therefore you get the big reversal. This goes back to what a trading friend long ago used to say to me, never trust a breakout, he would say. It was almost like his mantra, because I kept showing him all these breakout trades, and he kept saying, Eric, never trust a breakout. And I finally clued in, and that's why I tell you guys, never trust a breakout. So when you see a market that's in a trading range like this, go ahead, let it break. And what we're looking for is we're looking for the market to retest and confirm the breakout, confirm that prices can actually stay out. So this is where all that stems from, the whole never trust a breakout deal. And that's also where you get your whole iceberg scenario, Elmer. It's the same idea. Whenever you buy or sell above or below a significant support or resistance area, you're always in danger that the market is going to reverse on you quickly. So the way to avoid that is to allow the market to break, look for the retest, then look for the commitment to continue with the trend. Now, you should also know that markets only allow so many pullbacks or pushes, or what I loosely refer to as legs. Now, this one's a little bit more difficult to read, but let's take a look at this one here. Okay, we're not going to pay much attention to the overnight. So the market opens right about here. We get the one push up. This is really kind of like one sideways leg, and then we get the other push up. This is very common. When a market breaches a significant support or resistance area, you can usually expect two moves in the direction of the breakout. The first move is usually the one that creates the breakout, and then the second one is kind of your follow-through move. So knowing that, you can remain bullish even though the market starts to look quite bearish on you. You know, it keeps retesting the high. You actually got a counter trend signal here. Didn't have much follow through to it before the market resumes the high. Today's session so I would probably count this as leg one, a little bit of a pullback. This is leg two, and now we're seeing the market move the other way. So this is leg one. We'll look for a little bit of a pullback here, and we will get one more push higher. Now, will it be a big push or a little push? That I can't tell you. But I find that a little bit more helpful than just trying to buy or sell breakouts. But yeah, Elmer, you're right. It is always a challenge to buy or sell the breakout. Now, having said that, the best trading strategies, I remember reading this, they tested all kinds of different trading strategies. The best trading strategies, or the ones that performed best over a long period of time, were breakout strategies and moving average strategies. Why? Well, because both are essentially trend type strategies. Now, this particular study did not really say what kind of stops they used, if they used stops at all. But that's how that particular study played out. David, I'm glad you're in the room. David asked me the other day, hey Eric, how can I know when it's time to change contract months? All right, bear with me here. I've got to add the old NASDAQ back. We'll just do this for the NASDAQ, but you can do it for any market. No, that's not what I want. Okay. Here on your NinjaTrader, you have a great little tool called the Market Analyzer. You can go to your Market Analyzer. It's going to give you a window like this. Now from your Market Analyzer, what we're going to do is right-click on it, and we're going to select our columns. So I'm not really interested in the ask, the bid, or the last price, so I will remove those. What I'm most interested in is the daily volume. Do they allow me open interest as well? No. Okay, so daily volume is all you need to know. Click apply and close. And now you have your daily volume and your instrument. Right click and add an instrument from your list. So we're going to compare the June NASDAQ to the September NASDAQ. And you can see at this point in time, the September NASDAQ trading a lot more volume, better than double what the June contract is. So it's probably time to think about rolling into September. That's a very easy way to compare volume, and you can do this with multiple markets. You just need to make sure that you have added them to your instrument list. Another easy way to do it is to take advantage of a website like Bar Chart. I'll give Bar Chart a little plug this morning. So here's Bar Chart. Great website. They've got lots of stock type information. You can get opinions if you don't have one of your own. So what you want to do is you want to find the market you're interested in. Here's the NASDAQ. And you get a bird's eye view of all the different markets, or the contract months, I should say. And you can see that the September NASDAQ is higher both in volume and open interest. This is usually the service that I use. It just makes it easier because I can see all the different contract months. Let's say I'm trading something like, I don't know, let's say I'm trading here, live cattle, and I can't remember what the most liquid month is in live cattle. Well, it's August. See, I can see quite plainly. June is winding down. August has the highest volume and highest open interest. Although October not too far behind, so if my strategy was to have a longer term play to it, I may choose to actually trade the October contract because that gives me a lot more staying power. Here's another interesting one if we get down to the metals. If we're looking at, say, silver. Okay, it's still a little bit early. September silver still the big one after July. But once we get around the middle of the year, around July, August, we're actually going to see the December silver surpass September in both volume and open interest. So once again, it's the kind of decision, is my strategy going to require a longer term point of view? Well, in that case, I may choose to start trading December, even though it is only, July or August. And I could easily play the September market as well. Oh, we got our test of the extreme, and I looked the other way, and now the market is falling through the floor again. All right, Randy says, my trade forecasts are still not in sync with yours. Let me reload my historical data. We'll see whether or not that does not resync everything for you. Okay, I just got your second post here, David, regarding your contract months, which ones you're trading. Okay, so here's David's list. Oops, we don't need it that big. So David's already into August crude. That's fine. I'm still in July crude, but I'll roll at the end of the week. The mid cap, the E-mini, the NASDAQ, the Russell, the YM, the bonds, these should, and the DAX, these should all be in September. You can still trade them, but only for a couple more days. So you may as well roll all those into September. David's asking, which ones would you trade with a smaller starter account versus a larger account? Well, I think the NASDAQ is pretty tough to beat for a small account market. It's $5 a tick. You can see there's plenty of volatility. There's some really pronounced moves at times. So the NASDAQ, definitely my favorite, my top pick. After that, the mini Dow, it's a little bit more subdued, but it also has a benefit of only being $5 a tick. What that allows you to do is it allows you to participate with the smaller tick value. There's a lot of times, like if this were the Russell or even the mid cap, let's say I wanted to do the failure of the green bar sell, I can afford two contracts here on the NASDAQ, which give me options. If I were trading the Russell or the mid cap, or even the E-mini S&P, which are trading at $10 a tick or greater, guaranteed I would only be able to afford one. The problem with trading one contract is that it's very difficult to manage. The market goes up a little bit. Okay, now what do? Do I take profit on target? Do I try to run it out for more? What do I do? If you're trading multiples, you have the added advantage that you can take partial profits and you can try to run out the rest maybe for a little bit extra. So those are my two favorites for the small account trader, the NASDAQ and the mini Dow. Oh, we're getting a crossover sell here. Let me hop on board there. My favorites for the large account trader, I'm also partial to the NASDAQ still. Again, because of its volatility and smaller tick value, it gives me even more options. However, if you're trading a really large account, let's say you're trading, like a $100,000 or $200,000 account, and you're going to take advantage of your position size, and you're going to be throwing in 10 or 20 orders at a time, that could cause a little bit of a problem for the NASDAQ. You may actually start slipping the market a little bit with such large orders, in which case it's time to move up to the E-mini. The E-mini is the king of the hill. Oh, don't you dare tag me at break even again. Don't you dare. Oh, brother. Okay. The E-mini is, like I say, the king of the hill for all these stock markets. And I don't know if I would, a lot of people love the Russell. They say it's a purer market, that there's too many doctors and lawyers playing the E-mini and the professionals steer toward the Russell. I don't know if that's true or not. I also I'm not a big believer that you need to trade a lot of different markets, especially as a small trader. I think the small trader, you should pick a market and stay with it. And if you don't know which market to trade, trade the NASDAQ. Once you're comfortable with the NASDAQ, you may choose to add something else. I would say add the mini Dow. That's the YM. If you're a big trader, you can make a living trading the E-mini and just the E-mini. Crude oil is an interesting market to trade, as are bonds. But the more markets you add, the more your attention is divided, right? Like I follow 3 in the room here, and sometimes I get stuck watching one chart and I'll miss something going on somewhere else. Like I may glance over, see what crude oil is doing, and then I come back to my NASDAQ chart and it's like, oh, crap. Just missed a solid move on the NASDAQ. But, David, if you have the time, or if you have more people working with you, you can assign a market to everybody. Like one person watches crude, one person watches the bonds, another person watches the E-mini, and so on. As far as the financials, the 30-year bonds are great, but obviously you can't afford to be wrong too often. The 10-year note is also pretty good, but drink lots of coffee because it'll put you to sleep. Peter asking, hi Eric, I'm just going through all the indicators that come with the package. Do you use the super trend? And if you do, which bird do you use it on? Well, I use it on all of them, Peter. And what I do with the stop strategy, people always asking, what's the best stop strategy? There is no best. You need to get away from that mindset that one is better than another. You have 16 different stop strategies, so you can choose the one that you're most comfortable with, that you can choose one that seems to be responding well to what the market is doing. So today, if I put the ATR on here with the default settings, that would seem a little bit tight to me. So I would probably dial the settings back. And if that looked okay with me, well, then I would probably run the ATR setting. You're asking about super trend. We'll go here to the super trend. The super trend is a derivative of the ATR setting, ATR stop strategy. Super trend, chandelier, and ATR all have the same engine. They're all an ATR-based strategy. ATR standing for average true range. What they do is they try to adapt for market volatility. As the market becomes more volatile, the stops tend to give you a little bit more room to move. And as the market trends better, the stops tend to stay a little bit closer. If I put the ATR on my chart right now, this would not look like it's going to follow the market very well for me. If I took this signal up here, yeah, it worked out, but I would have got stopped here. If I sold this one, I would have got stopped here. If I sold this one, I would have got stopped here. So it's not following the market. I need to make some sort of adjustment. That looks pretty good, so I would probably run a super trend with a 3, 3, and 3. The difference between the super trend and the ATR is the super trend allows you to use a moving average to smooth out how the stops are calculated. If we were in a very sideways market like we were yesterday, and my intention was to try to hold on through some of these swings, you can see I would probably have to adjust it even more. Now, if I'm not comfortable with stops like that, well then I may need to choose a different stop strategy that I am more comfortable with. Something that you've seen me do in the room a lot is, let's say I was still short this number 1 signal right here. Well, now we're trading all the way down here. We've got quite a bit of open profit, don't we? And my super trend is essentially at break even. But I've probably got $200 in open profit that I don't want to let get away. So right now, I would be looking at moving to a more aggressive stop strategy, perhaps something like parabolics, or maybe even the bar high-low, which is going to keep my stops a lot closer, that I can protect more of that open profit. So you can adjust your stops while you're in a trade as well. And you can see now, you see how the stops are being pulled down, so that as soon as there's any slight hint that the market's going to rally, it's going to lock in my stops. But the super trend is a great strategy. A lot of times you'll see me use the ATR just because it's handy, right? Just because it's right there. Yeah, okay, I'll use it. It's close enough to the super trend. See if I go here to the super trend and I preview the super trend, hopefully you'll see it. There's not that much difference between them. Super trend is a couple of ticks back from the ATR. and the chandelier is going to be a little bit more conservative still. It's about 4 ticks back, but you see it still follows it pretty close. As traders, we all have the tendency to get into the habit of thinking that trading is more about the tools than the whole exercise of making money. Try not to fall into that trap. Your tools are important, but you know, are you going to lose money because you use super trend instead of parabolics? No, probably not. That's not going to be the deciding factor. David asks, how do you change the default chart settings so that every time you open a new chart, it contains the exact combination of warehouse indicators we want? Once you get the chart set up the way you like it, save it as a template. So go here, right-click on your chart, go to Templates, go to Save As, and give it a name. I don't care what you call it anything. Call it My Raptor. Okay? Click OK, and then you've got your template saved. So now next time you build a chart, we're going to build a new chart, and let's say we want to build a chart for the E-mini. So you go through the process. Mean Renkos, they're going to be, well, the E-mini, I require it doesn't matter. It's only an example. So you set your bar size. Now you find your template. Click OK. And once the chart finishes building, ta-da! So now I've got my E-mini chart with all my settings, all my tools that I like. Yeah, those templates, those are a lifesaver on NinjaTrader. They're a great feature. You should use them as often as you can. Elmer's asking, where can one see the volume that does not need additional software? Okay, so if you don't want to make the investment in the indicator warehouse mean dynamic equivolume bars, you can get volume from your NinjaTrader, the volume up, down, or just the regular volume right there. Just double click on it and apply it to your chart. Oh, I would recommend calculate bar on close, that you set that to false so that you can see the volume on the current bar. And there you go. So you can see your volume spikes. So a lot of volume right there. Another volume spike right here. A lot of volume here. Volume spike here. And you can see how they coincide with those fat bars on your dynamic equivolume bars. So that's what your volume looks like. And you can see volume always increasing when the market turns, right? Big volume, big volume, big volume, and there the market's turning higher. So there's actually a number 2 counter trend signal. That's the soft edge buy right there. couple more questions, and then I think we'll close up the room here this morning. Paul's asking, where did you get the market analyzer? Right here, Paul. You go to your control center here under File, to New, to Market Analyzer. And that's going to pull up a little window like this. And now you can right-click, and you can set your columns, and you have a whole slew of things that you can analyze. The reason so much has to do with, like earnings per share, 5 years growth percentage and whatnot. If you were trading the stock market, the market analyzer would be your stock screener. This is how you would filter your stocks that you would be interested in. Yeah, here's a good note as well from Tony. Tony says, just an FYI, I find my trade forecaster is often a little different than yours. It does, however, usually straighten itself out after a bit of time. I just trade the chart. And again, that boils down to try not to get too hung up on the tools. Okay, our trade forecasters may look a little bit different. It could just be, well, it is a data anomaly. Unless yours is saying, mine is saying full on scalp mode and yours is full on trend mode, I wouldn't be too concerned about it. Sometimes the problem is on my end. Sometimes it's yours that is displaying correctly and mine is displaying wrong. But as Tony said, trade the chart, right? The trade forecaster gives you clues as to what you might expect. Like right now, it's saying we're in swing mode, scalp mode, hot on the heels. So what does that say for us? Does that say we don't take this counter trend signal? No, of course not. This is a number 2 signal. It did not print because I have a feeling this pullback wasn't quite deep enough to signal the number 2 counter trend, but it is still a test of the extreme. We have had a trend preceding it. Am I not going to trade this because scalp mode is coming around? No, of course not. But knowing that scalp mode is coming up, or potentially coming up, I'll need to run a deeper stop, and I'll probably take my profit on target, because that's what you do in scalp mode. So again, try not to get too absorbed in the tool. Trading is not about perfecting your tool. I wrote a post about this just recently at Quora. Somebody was asking, I forget exactly what the question was, and I told them that don't get hung up on perfecting your indicators. That's not what trading is, and yet that's the rabbit hole that so many traders go down. Here's a nice way to finish out the session. Peter writes, hi Eric, on Monday I wrote down a rule, no more than 3 trades per day. I just completed my 3rd trade and up $400. Nicely done, Peter. All 3 trades were profitable. Thank you for the explanation. Now I'm working on my stop signal. Folks, when you have a trade quota, when you know you're only going to trade 2 or 3 or 4 times a day, that allows you to be picky. That allows you to hold out for the trades that look the best to you, so that you don't run around chasing your tail, just trying to grab one signal after the other, after the other, after the other. That's not how you're going to make money trading. You're going to make money like Peter just did, And if you can, I'm not sure how many contracts he was trading, but let's assume he was trading singles. If he's making $400 today, well, when he's in a position to trade 2 contracts, he just made $800. When he's trading 3 contracts, he made $1,200, and so on and so forth. That's how you make money trading. You don't trade more often, you trade more volume, but you have to find those high probability signals, those signals that have a good chance of working out. And again, when you're going for 2 trades or 3 trades or even 4 trades, it's a lot easier to go 2 for 2 or 3 for 3 or sometimes even 4 for 4 than trying to nail 10 winners in a row. That's not easy to do at all. All right, gang, we'll close up shop here for today. If you're going to continue trading this afternoon, it looks like we're going to be in for a little bit of a retest. The market does have a little bit of a sideways to bear flavor on it. And we'll see, I guess, what the FOMC report will bring out, but don't give up on the buyers. The NASDAQ bull's insanely strong. We'll talk to you tomorrow. Bye for now.